Good morning, all participants. A rainy morning in a Goa resort, and then we are going to talk about technology and risk management. And we had a very enlightening talk from the two previous speakers from the policy and strategic perspective. And then, ultimately, any technology, any process has to be implemented. And that is where the policymakers' role come. That is where the people who decide on the policy, on the implementation, their role come. It is at the apex level. So that was really a very enlightening talk. And I have a feeling that Dr. Behera also kind of preempted some of the things that I was about to say. So I will be very brief and I will not take long. Before commencing my talk, what I would like to mention is that here I will not be speaking on behalf of NABARD. Okay. I will be speaking as a risk management expert, as a head of risk who has worked across various domains. And I will be sharing my perspective as to how the risk management and advancement technology, they go simultaneously, they go together, and how each is dependent on the other. Let me quickly give a little of my background. So just to give a perspective. So I am somebody who has been working in the financial sector for over 3 decades, in the BFSI sector. And started my career with SBI, and then I was the head of credit of a private bank in India subsequent to that. And then post that, I worked in a bank in Dubai called Mashreq Bank. And then post that, I worked as the CRO of a leading insurance company, SBI Life. Post that, I worked with a Canadian-led bank as CRO. And for the past few years, I have been working with NABARD as the chief risk manager, as the principal advisor in risk management to the bank. So that is briefly my work profile. I have certifications from Premier, and I also am a CMIRM. Just wanted to mention that I'm not a tech person. I'm basically a risk management person, but as you know, anybody who is a risk management person, given the way technology is moving, one has to have an understanding of technology. So what I have is a common sense understanding of technology. And here I would like to share some of the perspectives from an extremely common sense perspective. Now let's look at risk management. And honored guests, please pardon me, I will not be using my jargons. Any jargons I will not be using, because neither from the tech perspective, which I may or may not be capable of doing, but as far as risk management is concerned, I am capable of using jargons, but I will not be using any jargon. So I hope you are comfortable with that. The point is, let's look at risk management, how it has moved. Initially, when we started our careers, as I said, I started my career as a probationary officer in SBI. At that point of time, most banks were only taking care of one risk, which was credit risk. So initially, when banks started, they were only taking care of the credit risk, and to some extent, if the banks had an active treasury, they were taking care of the market risk. Post that, probably in the 90s, it was thought that for the BFSI sector, the risk management is extremely important for the preservation of the BFSI sector, because the BFSI sector operates on the basis of trust. And the trust can be there when there is a perception of stability. So that is where progressively the concept of risk management for the entire domain, the concept of enterprise risk management came. So from credit risk management, the banks and the BFSI sector graduated to market risk, taking care of market risk. And then the last segment of risk management which came was the operational risk. And operational risk was a very broad canvas, which was taking care of the risks from the people and process perspective. So credit risk, market risk, and operational risk. Subsequently, what happened is that with the onset of the Basel regulations, the risks were considered from a pillar perspective. Here I would like to give a core concept on which the risk management starts. The risk management operates on a concept of 3 pillars. First pillar is the business departments or the businesses which have to take care of the risk from the first perspective. They are the first line of defense. This is the concept of 3 lines of defense. The first line of defense is the business. Second line of defense are the internal control functions. Where it comes is the risk management, the compliance functions, and the audit functions. So these 3 domains provide the second pillar in risk management. And the third pillar, of course, is the assurance function, where my apologies, the audit comes as the part of the third pillar of defense, where it gives assurance that the risk management and the bank is operating, the BFSI is operating as intended by the board, and then it gives an assurance that things are working. So basically, risk management started operating on the principles of 3 lines of defense. Then, of course, beyond credit risk, operational and market risk, when things started getting hotter, things started getting complex. So then came the 3-pillar approach of Basel. So first pillar was the 3 risks: credit risk, operational risk, and market risk. Then came the risks which are not covered under these 3 pillars. So many of the risks which were not covered under this came under the ambit of the second pillar. Okay, so the intention of the second pillar was that the entity should provide an assurance that all of the risks which are there are also being taken care of, and it is for the regulator to look at that. I'm just trying to provide a quick perspective from the risk management lookup. And the third pillar was the disclosure. So what does it mean? It means that I must disclose enough for the analysts, for the ones who are in the market, to be able to know how I am operating, whether I am operating as I am intended to operate. So there comes the third pillar. So first pillar, second pillar, and third pillar. So the point is that risk management became more and more complex, and then it required specialized people to handle risk management. So these days, you would require both the regulator, both in India and overseas, they require risk managers to be certified either by Premia or by GARP or by IRM, so that they have an overall perspective. So what happens is that while the initial understanding was that the risk manager should have a good understanding of the businesses alongside his domain expertise, progressively what happened is that the management of the entity became totally technology oriented. So here let me just quickly summarize how technology has moved in the last decade. So in the last decade has been transformative as far as technology is concerned. While it has been happening for a fairly long time, it has really gathered pace in the preceding decade, and the entire landscape of the BFSI segment has changed on account of technology. First thing is that the backbone of operation has become system and technology. It has been everywhere. Probably a decade back, when I was working with the insurance company, at that point of time, probably the NBFCs and the insurance companies were more technology focused. But what has happened is that with the onset of the small finance banks and the entry of private sector in the banking sector, it has impelled all the banks in the Indian context to become extremely technology oriented, to operate out of a system. And then when COVID came, it became a really test case for the banks to see how they are able to operate from a remote perspective, how well they are operating from a remote perspective. And that was really a challenge, in the sense that quite a lot of financial institutions, especially probably in the public domain, public sector, were not the way aligned to technology, which probably some of the small finance banks or the NBFCs were. And then COVID provided them an opportunity to test their business continuity management, to test their disaster recovery, resilience, and get ready to operate on an extremely different dimension that they were used to. Why I wanted to cite that is that now from that perspective, from just operating from a system perspective, now everything has become automated, system driven, and all banks are totally automated, totally system driven. So now to zoom on what has happened in the past decade. First thing is that I remember 3G was something that we are looking up to. From 3G, we proceeded to 4G and we proceeded to 5G. So once we proceeded to 5G, what happened is that certain things which were coming in the way of operation like latency, etc., were mostly taken care of. We could, the operators could think in terms of IoT and then remote operations and lot of things which were in the domain of probably science fiction got operationalized. So the entire segment changed. Second thing is that when we talk about data and big data, no human being is capable of using algorithms to be able to factor all the huge amount of data which is available and find patterns in that. Ultimately, leaving aside all the jargons, the core intention of any data analytics is to find patterns and then feed those patterns into a set wherein we are able to operate in the most efficient way. So that would only happen when the analytics happen and where the capacity of analysis is really very huge. So this is where the data analytics part comes in, and that entirely changes how the CRM is organized, how the customer onboarding is taken, how the behavior preference of the customers are factored to make sure that your reach to them is very focused and you tailor make your reach to the individual segment of customers. So what basically has happened is that in the intervening period, the ability to analyze data, the way artificial intelligence has come out from just fraud analysis, etc., to the business analytics part has entirely changed the perspective. Now, in this perspective, what are some of the key things that the practitioners in the BFSI segment and the technology need to keep in mind? So I would like to share some of my perspectives. First thing is that the onset of technology is something which is like a bullet train. So it is moving at an extremely fast pace, and it is important that all domain experts, including risk managers, be abreast of the way the technology is transforming the entire landscape and be able to have at least a common sense understanding of the technology part, because the moment you lose touch as to how the technology is transforming, your ability to intervene would also get very limited. That would be point number one. Point number two would be that we'll have to get out of our staid ways of thinking. Okay. Now, what happens is that if you look at the population, even in India, what is happening is that the age profile of the active population is progressively changing. So what has happened? We have people who had operated on an extremely manual mode of operation, and now the entire system has become totally system driven. And the percentage of those segment of people are increasing. So what was earlier hinted at by one of the eminent speakers is that opens that substantial segment into cyber crimes, etc., because they are also actively operating in the field. So there is a very strong requirement that the awareness of technology and the awareness of how technology is transforming, how somebody can be abreast in a common sense way of technology so that somebody doesn't fall prey to such kind of manipulations, is also something that both the technology leaders and the risk management leaders will give a thought to. Because as the percentage of people who were moving from a manual mode to a technology operated mode is increasing, there is a strong requirement that such people need to be protected. And that is where we need to spread awareness, and that is where the BFSI segment, the policymakers need to give effort so that the awareness about technology, about the risk also goes up. The other thing which comes to my mind is that how do we manage risk? Now here in a technological world, here the regulator has also been very, very proactive in the sense that previously the CISO, who is the Chief Information Security Officer, was somebody who probably had a very strong role in all BFSI segments, but then his role was either reporting to the Chief Risk Officer or to somebody else fairly senior, maybe CFO. Now what the regulator has done, and all of us are aware, that now like the Chief Risk Officer reporting to the board, now the regulator has prescribed that the CISO should have a board reporting, which means that the CISO is empowered by that particular change in the reporting metrics. When a particular officer or executive has a board reporting role, then the board reporting makes him much more powerful and also equally responsible. And the banking regulator has prescribed that the CISO functions in all the regulated entities would have to report to the board itself. So that itself also would prompt most of the organizations to strengthen the role of CISO, and this has already happened. The CISO role has been definitely elevated in most of the regulated entities, especially in the banks. The other part which we need to keep focus is that as technology advancing, so is risk management, and risk management is advancing in a way that I talked about the three lines of defense. The first pillar is the business, second pillar is the one which formulates the framework, the structures, and the third pillar is the assurance. Now, what has happened is that the first pillar and the second pillar has kind of merged together. So that would happen when risk management becomes part of the strategy. So when you take risk management while formulating the strategy of the organization, then what you do is that you proactively look at how you are going to position yourself in future, and then there you bring in risk management into a strategic role. So you foresee what are the risks which may be coming and what is the proactive strategy that you will have to build in so that the organization is protected in all senses. So coming back to the three pillars of defense that I talked about, so this has led to a almost coalescing between the first pillar of defense and the second pillar of defense, which means that the risk management and the business, which is at the forefront, have started working together. This is a very welcome development, because the moment risk management becomes prescriptive, then it is seen as something outside. It is seen as a function which is coming in the way of business. And I have, having been the CRO of both a bank and also an insurance company, I have seen that the perception that risk is coming in the way of business is something which doesn't help. Now, when the first pillar and the second pillar merge together, this is a very nice way of integrating risk management both into operations, and as I alluded earlier, now risk management has become the part of the strategic working. So these are the way that risk management is enhancing itself. So to kind of sum up, and also I am acutely aware that we are running fairly late, so I'll not be taking long actually. So 2 points I would like to re-emphasize here. First is that since the risk leaders and the technology leaders are here, most important thing, as I said, is that in view of the percentage of people who would have worked in the manual mode and operated in the manual mode, and they having to work in the system through a system, etc., we need to enhance the awareness level, and that should be done in an extremely strategic manner. That will be something that we need to keep focus on. The second thing is that there is a requirement for the risk leaders to be technology savvy. Similarly, for the technology leaders to be risk savvy, so that both combine together and they go a long way to make the both technology and risk management work in sync, and make sure that the objective where advancement of technology and risk management combine together to make for a strong BFSI world. Thank you so much.